Welcome back to another deep dive. Today, we're really zeroing in on something pretty fascinating. It's this intersection, where cutting-edge blockchain tech is meeting traditional finance head-on. We're going to pull apart a really significant announcement from Metallicus and Metal Blockchain, all about their integration with let's call it the established financial world.
That's right. And our mission here, it isn't just to read you the headlines. We want to really unpack what Metal Blockchain, getting FedNow Certified, and linking up with Fiserv, what that actually means. Because this feels like more than just a technical update. It seems like a genuine shift potentially for payments and maybe finance overall.
Okay, let's unpack this then. The first really big piece of news, the one that seems to make Metal Blockchain stand out, is this certification with the Fed's FedNow service. So when we say FedNow Certified, what does that really mean in this context? Why is it, such a big deal?
Well, fundamentally, it means Metallicus and Metal Blockchain are officially on the list. The Federal Reserve Certified Service Providers list for FedNow. But here's the kicker, the really unique part. They are, as far as we know, the only blockchain-native provider certified for send, receive, and liquidity management transfers. All three.
Okay, wait. All three: send, receive, and liquidity management.
Exactly. And that last one, liquidity management, that's crucial.
That is a critical differentiator, isn't it? Because we've seen others try to bridge this gap, but maybe just for sending or receiving.
Precisely.
Yeah.
Getting certified for liquidity management transfers, well, that signals a much deeper level of integration. And frankly, trust. It suggests they've met some pretty stringent requirements around handling the actual flow of funds, the capital management, in real time, which is vital for banks.
Right. It's not just about passing messages back and forth.
No, it implies they can handle the underlying financial mechanics in a way that meets Federal Reserve standards.
Right.
So this really puts them, right at the forefront of real-time payment innovation here in the U.S. It's a pretty clear signal of trust, regulatory alignment, things that are often, let's say, challenging in the blockchain space.
Okay, so that's the FedNow piece, huge signal of trust from the regulatory side. But trust also comes from playing nice with the existing giants, doesn't it? Which brings us to the other big news, Metal Blockchain integrating with Fiserv. Fiserv, they're a global payments leader. What does this hookup actually let Metal Blockchain do?
Yeah, Fiserv is massive. This partnership basically builds a practical bridge. It means Metal Blockchain can now process standard credit card payments and also ACH payments and do the bank-to-bank transfers for things like direct deposit and bills. And they can do this using Fiserv's existing proven technology rails.
So users or institutions can move money between, say, their regular bank account and the Metal Blockchain ecosystem.
Exactly. Seamlessly. Or at least that's the goal. Moving value between traditional finance and Metal Blockchain's Layer 0 ecosystem securely and, crucially, compliantly.
Okay, the announcement made a pretty bold claim here. It said, this is more than just interoperability, it's the foundation of the future of finance. That's strong language. Why is this integration seen as so foundational, not just, a convenient feature?
Well, I think it's about embedding blockchain within the existing system rather than trying to build something totally separate that then needs complicated bridges.
Yeah.
By integrating with Fiserv, they're tapping into the payment rails that, let's be honest, already handle billions of transactions.
Okay.
It means banks or fintechs don't necessarily need to rip out everything they have. They could potentially leverage blockchain efficiency through systems they already use and trust. It makes blockchain less of an alternative system and more of a potential upgrade path within the regulated framework. That's why it feels foundational.
Okay, that makes sense. It's about meeting the market where it is.
Right. Now, to really get why this is possible, we should probably touch on Metal Blockchain's underlying tech. It's built as a Layer 0 blockchain, and that's quite different from Layer 1s like Bitcoin or Ethereum that people might be more familiar with.
Okay, so if Layer 1 is like the main road network, what's Layer 0? Is it like the ground underneath everything? The materials describe it as infinitely scalable, compliant-ready, and modular and interoperable. Can you break those down? How do those features actually help a bank, for instance?
That's a decent analogy. Think of Layer 0 as the foundational protocol, or maybe the operating system, on which other chains or applications, potentially multiple Layer 1s, can be built and communicate. So infinitely scalable. That means it's designed architecturally to handle, theoretically, massive transaction volumes without getting clogged up like some single chains can. Essential for finance.
Okay, so it avoids bottlenecks.
Right. Compliant ready. This is key. It suggests the core design anticipates regulatory needs. Features for identity, for transparency, for auditability might be built in at a lower level, making it easier for banks and fintechs to use it within the rules.
So compliance isn't an afterthought bolted on later.
Hopefully not, yes. And modular and interoperable means it's designed to connect easily with other systems, both blockchain and traditional, like plugging Lego bricks together. This whole setup, this layer zero approach, it's explicitly tailored for banks, fintechs, and developers who require trust, speed, and compliance without sacrificing decentralization. That's the pitch.
And they have other pieces too, right? Stablecoins, tokens.
Yes, the broader ecosystem includes things like their XMD stablecoin, which aims to be a regulated form of digital cash. There's a metal governance token for, network decisions, and the XPR bridge network to connect with other blockchains. It's presented as a kind of a full toolkit for building this real-time, programmable money infrastructure, one that's ready, they claim, for the regulatory landscape of 2025 and beyond.
Okay, this paints a much clearer picture. So let's bring it back to the big so what question. For listeners, for institutions maybe dipping their toes in, what does all this mean practically? The source material hammers this point. In a world where compliance is no longer optional, what's the core message here?
I think the core message is that Metallicus is trying to demonstrate quite forcefully that blockchain doesn't have to live outside the established financial system. It can actually integrate with it, maybe even improve it from the inside. These achievements, the FedNow Certification, the Fiserv link, they're not just lines on a technical roadmap. They feel symbolic. They signal a shift towards a future where regulated, secure, transparent finance can be built using blockchain technology. It's about making blockchain palatable, even attractive, to regulated entities.
It really feels like the conversation has shifted, doesn't it? Just a few years ago, blockchain and regulation often felt like oil and water. Now we're talking Fed certifications, major payment processor integration. It's moving fast. What do you see as the next big hurdle or the main challenge now?
That's a great question. Honestly, I think the biggest challenge now isn't necessarily technical anymore. It's about adoption and education. It's about convincing the consumers that these integrated blockchain solutions are not just compliant, but actually better, faster, cheaper, more efficient. They need real-world use cases that clearly show the benefits over the old ways of doing things.
Yeah.
Building trust takes time, even with these certifications.
Demonstrating that value proposition clearly. Got it. Well, this has been incredibly insightful. We've really unpacked Metal Blockchain's unique position with FedNow, Send, Receive, and Liquidity Management, which is key. We've looked at the Fiserv integration, building that bridge to traditional card and ACH payments, and we explored how their Layer Zero foundation aims to provide that scalable, compliant base.
Indeed. And maybe the thought to leave everyone with is this. As compliance becomes, more and more central to all finance everywhere, really consider what this Converges Blockchain Innovation Meeting, established financial infrastructure, what it can mean for the systems you use. How might this reshape things for banks, for fintechs dealing with digital assets, and what new kinds of financial services might become possible when these worlds truly start working together seamlessly? Something to think about.